Here we are again. Here we are again. It's been about 2, 3 weeks since I've been on this trading view platform here. Well, this trading view platform teaching you. But here we are back again. We're going over displacement. Okay, this is the second revival of the revivals Invoke, and we're going over displacement, what it is, how to use it, how to implement it in your trades, all that. That's what we're going over today. Okay. So the verbal definition of displacement is basically when price is moving fast. If you want to keep it short and sweet, it's when price is moving fast. Or if you want to get the more, I guess you could say, complex or more um, defined definition, it's whenever price is moving fast while creating imbalances. Imbalances such as volume imbalances, fair value gaps. There's more. I can't believe my brain, but there are more imbalances. I'm sure there's a lot more. But whenever price is moving fast while creating imbalances, like for example, you see how price is heading lower here? We can clearly see that there's smaller bodied candles or smaller range candles back here. Price goes lower, right? It is moving fast lower because, the candles are getting bigger. But are there any fair value gaps here? No. Is there even a volume imbalance in here? No. No, there isn't. So this isn't displacement, okay? And displacement basically shows where price really wants to go, okay? You'll see it, okay? Like for example, you see how price is moving higher here? Is it displacing higher? No. So this is probably a key sign that this move is only temporary. Okay. Yeah, you can trade it. You can catch a temporary move all you want. But just know there is going to be some sort of reversal coming soon. Okay. That's basically what displacement tells you. It's either lack of displacement or displacement. But we're going over strictly displacement because this is a video that I've gone over 2 years ago. So now I'm revamping it, teaching it back to you. All right. So let's go over some forms of displacement. So you see how price is consolidating here. Obviously, price isn't moving fast. It's clearly in a range. It's moving slow, up and down, bouncing up and down, but down in a single range. It's obviously not moving fast. It's not displacing. It's not doing any of that. Okay. But if we look a couple candles afterwards, we can see the candles start to get bigger and the gaps that are being created start to get larger. So we can clearly see that price wants to go lower. It's showing it. It's a willingness. Okay. Whenever you see displacement, it's like a willingness that price wants to go lower. Okay. If you see, let's say institutional order flow is bearish, right? But you see price going higher. Is it going higher slowly or is it going higher fast? What I mean by fast, is it going higher while creating fair value gaps with displacement, or is it going higher with some sort of slow momentum like this? If it's going up with some slow momentum like this, then that means there's probably going to be some bearish displacement coming after this because, like I said, this little up move here is only temporary. Because look, displacement is like, nah, nah, not nothing over here. It is matter of fact, is there any fair value gap here? No, there isn't actually. I thought there was at least one, like somewhere in this area, but there isn't. So there's no displacement on this time frame, obviously. But if you go to like the 1 hour or 30 minutes or something like that, you're obviously going to see some displacement. But remember, this goes for any time frame. Okay. So let's keep looking back. We're going to implement this into some trades soon. So as you see, price over here, you just kind of consolidate in some sort of range where you do have some whatever you want to call this, some breakouts of the range. So I guess you can say some flash crashes, I guess you could say, out of this range. But eventually, price said, "Whoof," and just came all the way down. Okay. What price can do after it has displaced in whatever direction, it can retrace into the displacement. That's called a displacement range. We will be going over that soon in your rivals. It can retrace into the displacement range, such as a fair value gap, an order block, or some PD array that's within the range, and continue the displacement. Because if you look, after this consolidation, we displaced. Okay, why do we displace? How can we say that we displaced? Fair value gap. See that? Fair value gap. Very, very cool. What price does, it retraces into that fair value gap. Does it come to that order block? Nope. It doesn't. It doesn't. But guess what? There's a breaker here. There's a breaker. Then there's a fair value gap here. Same area. They're right into each other. I don't know what you guys call this. The SMC concept people. There's a big difference between ICT and SMC. I personally call it interbank trading. But some people call this, oh, this is a unicorn model. Yeah, come on, dude. That's a breaker. Just stop giving it such cute all nice names. Okay, it's a breaker and a fair value gap at the same place. But as you can see, price came up, consolidated a little bit more, accumulating orders. As you know, whenever price consolidates after retracing something or doing something that's likely to conclude and continue in the next direction, it's likely to consolidate, or it'll just keep going lower. But in this case, it accumulated, and then it was like, oh, okay, let's finally fall. Okay, and then as you can see, it did indeed continue the displacement that began right here. Okay, so I'm kind of making it seem like displacement is like the holy grail, which is not. Okay, don't use it by itself. Remember, I'm teaching you these concepts fragmentally. Okay, not in a form of like this is this is that, this is this is that. Yes, this is that, or whatever. Okay, displacement is this, fair value gaps are this, order blocks are this. Okay, but I'm not saying use them like in a singular fashion. Put them together, use other confluences to really see what's going on. Okay, and I have heard some people say, but how do we put it together? How? Like what are we supposed to do? How do we put it together? I'll be teaching you that soon. But just give me some time, okay? Just give me some time because I still got school. I got stuff I have to do. Okay, so I will be teaching you that soon. Just give me a little second. But here we go, continuing. You see how prices accumulating here, building up orders? Well, guess what? What are we looking for soon? Displacement or some form of manipulation before the displacement. But in this case, it just displaced. We accumulated and said we dropped. What does price do? It comes back up and it retraces into the displacement range. Does it come to that fair value gap? No, it does not, sadly. But I think it does come to this breaker. I don't even know if that's a breaker or not because it looks so weird. Yeah, I don't think that's a breaker. But it did come back up into this mitigation block right here. And it just came to a optimal trade entry of the displacement range. If you look, came to an optimal trade entry right along. Oh wait, that's the wrong way. My bad, guys. Just being a little autistic right now. Hold on. There we go. Okay, that's correct. But it did come into an optimal entry of that range, which you could have, used for extra confirmation for your entry, and then look for a PD array, which was this mitigation block right there, right along. Wait, why is it selecting it? Remember, if you don't know any of the things that I'm talking about, I have videos on it. Okay, if you don't know what a mitigation block is, you can exit this video right now, go look at what a mitigation block is. All my videos are short, and then come back here. YouTube, if you're signed into an account, it should say where you left off at. It should say where you left off at, wherever, however long this recording is, however long this recording currently is. It'll leave you off there. If you don't know what a mitigation block is, hey, go to my channel, learn it. Then come back here, okay? Continuing on, price of trades into the order block. I mean, not order block, but mitigation block. And what does it do? It continues the displacement. Why can we say displacement? Because look, fair value gap. See that? And then it also confirms displacement because we saw displacement higher. But guess what? This following displacement violated this fair value gap. It violated it. See that? A matter of fact, I didn't even notice, but it ran through it and came back into it. So this is an inversion. Matter of fact. So even if you miss this mitigation block here, well, guess what? Matter of fact, hold on. You have an order block and an inversion. Okay? If you miss the order block, you got this inversion right here. That's the inversion. As you can see, I pull this out. Price ran through it. And this candle came back up. That would have been your short. And you could have took that low. Boom, that would have been your trade. Absolutely amazing. That would have been your trade. Okay. Or, like I said, there's an order block right here. Remember, price comes below the order block, then it goes back up. Boom, there's your entry. Okay. There's your entry right there. Order block. Oh, you missed order block? Okay, fine. Inversion. I don't trust inversions that much, but seeing them work is kind of magical, honestly. It's something to really see inversions work. I don't really trust them nor use them that much to trust them. But whenever you do see it work, it's amazing. Okay, it's really amazing. Here we go. Final example, and then we're gonna implement this into some trades, into some hindsight trades, not live trades, but hindsight trades, so I can teach you. Okay. Price is consolidating, accumulating, in a range. We finally have some displacement out of it, as you see here. We can call it displacement because what? There's a fair value gap there. Okay, see that? See that? Price retraces back into the displacement range. Okay, but pay attention. Let's pay attention here. Why? What is it doing? Okay. When it comes up, it takes out this short-term high, remember. It doesn't have to necessarily stay within the displacement range. It can come out of it. It can violate the displacement range's high. It can do that. And it did that here. Okay? And then it can, finally displace. It can do that. It really can. Then if you notice, if you look, this is a reaper. Also, this is actually a reaper. Because if we go from here, this is a reaper right there. Then once price came below the reaper, as you can see, wow, that's amazing. Look at that. It tapped up into the reaper, and then you got this gigantic Jason Love candle, and then you have more Jason and more Jason. It's amazing. Okay. Then we got another displacement. Wow, look at that. Huge liquidity void right there. Why do we say liquidity void? Because we left this consolidation with a gigantic imbalance. That's what a liquidity void is. Okay. Price comes into the liquidity void, uses it as a PD array. Continues the displacement. And wow, look at that. Price comes back up into the displacement range again. What does it hit? This order block. Well, not order block, but mitigation block. And what does it do it precisely? Let's zoom in here. Oh wow. Do you see that? Look at the precision. That's barely like 2 points above it. Do you see that? Isn't that amazing to see that happen? Look at that. Boing. Displace lower. So simple. So cool to see that actually, isn't it? Very amazing. Mitigation block is one of the strongest PD arrays. Okay, just know that. That's why they're so strong, as you can see right now. Look at that. Mitigation block. Mitigation block. But Reapers, one of my favorite PD arrays, are still pretty good whenever you can see them. They don't form a lot. The bandwidth of them is pretty it's pretty short, but Anyways, let's go into some trade examples, shall we? So we're gonna go on to, I don't know, 15-minute, I guess you can say. Let's go into the 15-minute. Re-zoom in on it here. All right, so let's look at yesterday. Yeah, yesterday, Monday. Okay, March 17th, 2025. Okay. Let's go ahead and look on here. So as you can clearly see, price went higher. Now let's look on how we could have traded this. In hindsight, of course, in hindsight. Okay. What price did initially at 8:30, there was an 8:30 news driver. We drove price up. We had displacement higher. Why? Because we just had a liquidity void here. Price came back into the displacement range, filling the liquidity void, to then head back higher. This second push up didn't have any displacement. It didn't. So it's showing signs of weakness, okay? And it, I guess you can say, distributes those sign of weaknesses, or really, when the market puts its hand out to you and says, no, we don't want to go in this direction yet. Let's have a lack of displacement lower, showing that, okay, we don't want to go lower, but we're going lower temporarily to go higher. We came down into this low. We came down into this short-term low here. And if you pay attention, price also came into this fair value gap here. Remember, a low with an imbalance below it is a strong low, or a not strong low, because people take strong low as in price will not break it. What I mean by a strong low is price is tempted to come and take that out. That's what I mean by a strong low. It's tempted to come be like, oh, we got to get that low. Like, oh, we got to get that. Like, oh, that's money down there. We got to get that. But price comes down into into this point of liquidities, equal lows here, down to the fair value gap, as we can see. Then it comes back up, creates a market structure shift, comes back down into the order block, into the breaker. See that? Are you paying attention? Do you see this? This is all happening within like 7 candles. Not even 7. Actually 6. Okay? Have a market structure shift, breaking this high here. On a lower time frame, I'm sure there was a fair value gap within this little range here. But we came down into this order block and this breaker. You want to see the quadrants of the order block? Sure, I don't mind. Let's put it on. We came into We came below the equilibrium, but we didn't break through it, okay? Because displacement will also, will also show signs of disrespect or respect. As we see here, ICT normally says you don't want to see the order block, the 50% or the equilibrium of the order block, or the mean threshold, whatever you want to call it, get broken. In this case, it got broken, but it still respected it. How did it do that? Lack of displacement. As you can see, it wasn't displacing through the order block. It was simply coming down into it, okay? Like, for example, think of a glass cup. If you throw the glass cup on the ground, it's gonna break, right? But if you softly put it on the ground, if you lay it on the ground, or just just put it on the ground very softly, it's not gonna break, is it? Same thing with price. If price is moving fast through the order block, or it's displacing through the order block, it's going to break it. It's going to disrespect it. But if it's just coming into it nice and slow, not moving too fast, it's just moving real nice and slow, it's not going to disrespect it. It's not. And did it do it here? No, it didn't. Yeah, it came below the mean threshold, but still, it didn't displace through it. And if you see, we stayed above the lower quadrant. So that's even another confluence. ICT is amazing. ICT concepts are absolutely amazing. We stayed above the lower quadrant. We didn't displace lower. And then if you look, for example, let's say you go on the 5-minute and you look for some fair value gap with that market structure shift. Let's go back wherever that swing was. Here we go. All right, so there's no fair value gap here after the market structure shift. So what you do, you go even lower. Okay, this is what you do. You go even lower. Okay, you go even lower. Yes, this is what you're supposed to do. All right, so you could have used this fair value gap here and either set your stop here. You got stopped out. Oh my God, you got stopped out. Pay attention, okay? If you see the fair value gaps getting disrespected, refer to other PD arrays. Refer to other PD arrays. Okay, because remember, price is fractal. Okay, if it can disrespect a fair value gap on the 4-hour, it can disrespect a fair value gap on a 3-minute. Okay, price is fractal. It does everything, everywhere, on every time frame. Okay, so you have to understand that. The 1-minute is not going to respect every single fair value gap. Even the 4-hour isn't going to respect every single fair value gap. So if you see that price is displacing, as you can see, it's displacing through these fair value gaps. Okay, so that's a confluence that is disrespecting these fair value gaps. Once you see that, it's like, okay, let's get out. If you notice that, don't even let your stop get hit. Okay, lose a lower amount than you wanted to. Okay, because if you were in this trade live, right, and you saw price moving through this fair value gap here, and you saw it just rushing to your stop, you could have just gotten right then and there. Got out right then and there, because it's not respecting the fair value gap. It's not respecting the level that you wanted it to respect. So go ahead and get out, refer to another PD array, and move on with your trading day. Price comes down into this low right here, creating a what? It creates a liquidity purge. A liquidity purge, not a liquidity sweep, not a liquidity whatever they call it. There's so many different terms for liquidity purge, but the official term is either liquidity raid or liquidity purge. I use purge because I've heard ICT say that years ago. Okay, heard him say that years ago. I don't know where they get sweep and all that other stuff. I don't know where they get that, but it's liquidity purge. Okay, take it from me. It's liquidity purge, not liquidity sweep, not all those other crap. It's liquidity raid or liquidity purge. Okay. Anyways, moving on. We have this order block that was left behind right along there. See that? That's the order block that was left right along there. Then we had this inversion right here. You see this inversion for value gap. Price comes down into the inversion for value gap and doesn't displace through it, showing that we want to use it to go higher. Oh, why did I do that? Oh, that's cool. I didn't know you could do that. But I just accidentally figured out a hotkey that you can use on TradingView. But price comes down, doesn't displace through it, so you can take your entry there. Shows I want to go higher because it's moving away from it, and it's like, oh my, look at this, oh oh my God, I just got 300 points. What? Is this the power of displacement? Yes. You understand? This is the power of displacement. Do you understand it now? You understand it now? For example, let's go ahead and draw a little buy position at that inversion. Okay? At that inversion, we're going to say you got in as soon as they entered it. Okay? And then you would while you were in it, um you looked for respect or disrespect. Okay? In this case, it respected it. So you can either set your stop down here, and which is what I would probably do. Honestly, I'll probably do that. I'm not gonna lie. Or you can set it at the inversion gaps candle low, which is right here. You could have targeted. Let's jump up to the hour. Let's see where you could have targeted. You could have targeted these equal highs here, right here, or you could have targeted a fair value gap that's above those equal. This fair value gap is right here, but it already got filled with that first initial move. So what I would probably do is you can use this also. Whenever you see a lack of displacement, that's where you can get out when there's a lack of displacement. So let's jump back onto lower time frames. And where you see a lack of displacement will most likely be around this area here. This is where you would see a lack of displacement. So that's a risk to reward ratio of 9. Hey, I just told you how to catch an entry with displacement. You can call this cap all you want. You can call it cap. I don't mind that. I'm just simply trying to teach you. If you want to be a little weirdo and say, "Oh, this is cap. This is in hindsight." I just taught you everything. And if you seriously, because the people have been getting on me recently because I've been gaining more popularity, as you guys have been seeing. I've just been gaining subscribers organically, and obviously there will be haters. Okay, I don't really mind it. It's actually very fun to see them hate. But if you do hate, like why? Like come on, just think. I'm sitting here teaching you. All right, and hopefully you're learning and not just sitting here trying to clown on me. But I just taught you the power of displacement. Enjoy it. Use it well. Use it in your trades. And I'll see you guys in the next one. Peace.